Is there a powerful strategy in spikes that allows us to enter trades with very high accuracy and excellent rewards? Hello, this is Tradeology, and I hope you're doing well. Before watching the video, I'd really appreciate it if you subscribe to my channel. Now, let's go to the chart and learn this strategy step by step together. In the previous video, we understood what a spike is and learned one of the most popular entry methods for spikes. I recommend watching that video before continuing with this one. In today's video, we'll learn the second method of entering with spikes, which is highly professional and high level. The previous strategy worked like this: we placed a limit order under the last spike candle, and once the price reached this order, our trade would open. Sometimes, however, the price forms a spike but then makes a deeper correction, allowing us to enter with even higher precision. Today's strategy is called back to break even. Here's how it works. First, we draw the key levels. At support, we wait for a spike to form. The very first candle that started the spike move is called the break-even spike candle, and it is extremely important for us. Instead of placing a limit order under the last candle, we wait for the price to retrace and reach the break-even spike candle. Once the price touches this candle, we have three possible entry methods. The first method is to place a limit order directly on the break-even candle, with the stop loss behind the spike itself. Once the price reaches this candle, an upward move will likely occur. The risk-to-reward ratio of this entry is much better than 1-to-1, and in the minimum case, you can usually achieve 1-to-2 or even 1-to-3, since the entry point is very optimized. The second method is to wait for the price to reach the break-even candle, and once it does, you place a buy-stop order above the last candle of the spike. Your stop loss can go either behind the last candle or behind the main spike. The third method is to wait for the price to reach the break-even candle and then enter after a strong bullish candle forms at that area. So, we now understand how to use this strategy to enter trades. Let's go to the chart and look at some examples. When you open the chart, the first thing you should do is map the overall direction to understand where the price is likely heading. For example, if we are in a descending channel, we can wait for a bearish spike to form at the channel top and then apply the back to break-even strategy. In this area, the top of the channel, a bearish spike has formed. Now, we must identify the break-even candle of this spike. The first candle that started the bearish move is the break-even candle. The only thing left to do is place a sell limit order at this candle. When the price reaches it, the order will activate, with the stop loss placed behind the spike. This allows us to trade with very high risk-to-reward ratios. Do you see the difference between this strategy and the first one? In the first strategy, you enter directly within the spike, but in this one, you wait for the pullback, which often gives higher rewards. The exact reward depends on backtesting, so don't get confused about how to calculate it. By running at least 100 trades in a backtest, you'll figure out the optimized reward-to-risk ratio. From experience, I recommend not taking trades with less than a 1-to-2 ratio in this strategy. Now let's move on to another example of this powerful method. Imagine we are at the bottom of a range. When a bullish spike forms and we identify the break-even candle, we can place a buy limit order exactly on that candle. This allows us to enter with millimeter precision because that candle is a key decision point for price. Once price touches it, it often moves upward. Of course, this strategy will not always work. Please manage your expectations in trading, otherwise, you will never reach your goals. For example, in another setup, a spike forms at the bottom of a range, and we place the order on the break-even candle. Instead of going up, the price moves sharply down and hits the stop loss. This is completely normal. Every strategy wins sometimes and loses sometimes. What matters is that if the strategy is designed properly, it will be profitable in the long run. No strategy in the world wins all the time, so don't let scammers trick you into believing otherwise. Thank you for staying with me until the end of this video. If you enjoyed it, please like the video and leave a comment telling me whether you've ever used the spike strategy. And finally, I'd really appreciate it if you subscribe to my channel.